question.
Yeah.
Sure.
That's a waste of 3 of your time and of staff time. And so certainly we applaud and encourage that board involvement, and just would add the small caution to make sure that it's a unified effort.
Yeah.
So those were the things I wanted to comment on specifically. I would be thrilled to answer any questions you have about the process. I know you probably haven't had the chance to really dig into the numbers and ask specific things there. But
you mentioned near to be complete document. I think Blaine shared with me there's something called a peer review, Blaine, that
we call it an engagement quality review.
Okay.
Not we, that's the audit standards call it that. And so we were just working through some last minute adjustments. The cash flow statement I'm going to go really nerdy on here for a minute. The cash flow statement is a very difficult statement to prepare the way government auditing standards require it. It's not as simple as taking your bank statements for the year and adding them up and subtracting and coming up with what it is. It's a tough process, and with the amount of transactions that had an impact on the prior year, the prior period adjustment that we have, it doubles in complexity. So we're still working through some things there. So your cash flow statement in this draft, the numbers will likely change a little bit there. I mean, the ending cash is what it is. It's just the middle ground. So that's still in the process. Once that's done, we'll turn it over to the EQR person, and he'll get through it pretty quick. So we should have it soon.
Please tell me your name again.
Paul Skeen.
Mr. Skeen, it seems like the last 3 pages then of the report are where you're suggesting we make changes.
Let me make sure that I'm operating from the same thing. Yes, those are,
Page 39.
that's the schedule of findings, and that also has management's response. So the first criteria, condition, cause, effect are things that we've drafted, and then management has responded to those items as well.
Is it possible for us to dive into those now or in the future very soon? To really, dig through these and see the problems. I mean, it's just 2.5, not even 2.5 pages.
Yep.
And this is
However
so
you'd like to do
critical
it.
for
Absolutely.
all of us to really
Yep.
understand and apply together.
You bet.
What we're looking at is we can handle most of this tonight if you want to for a few moments, or you can have another board meeting on the 30th and have Paul come back and again the question go through it again. If you feel like you want to do it tonight, I would prefer doing that. Like Paul said, I'm just going to bring it back.
Yeah, well, I take any reason I can to get up to Heber and your beautiful valley up here. So I'm on your schedule for that. So if you'd like to go through them now, if you'd like a chance to read through them and ask questions and then come up next week, or a combination of both, whatever works for you.
Maybe go to your recommendations, what they were, and then what our current staff is recommending also they can help change the condition or process stuff, making a review that with this, what you picked out and what management is going to do and what we should be looking for the board.
So on page 30 is where these the schedule of findings begin. The first one, the material adjustments, is the significant deficiency that we noted. A lot of this, the criteria, I'm going to skip that. That's kind of just mundane accounting fees. But the condition is part of our audit procedures. We proposed material adjustments, which we talked about, to cash, receivables, inventory, capital assets, debt, accrued liabilities, revenues, and expenses, which if we weren't involved would have gone unrecorded. So if there were no audit, there would have been material misstatements with the financials. Obviously, that's silly to say, what if we didn't have an audit, because you're required to by law. So that's the condition. A lot of this one in and of itself becomes, I'll give my response and then we can go through management's response. A lot of this goes away with having a CFO in place for the year-end close, being able to go through and make adjustments. So I think that management has already done the number one thing that we would recommend to fix it. So the management response, management is aware of the adjustments, the efforts are underway within the organization. The regular interim statements will be prepared, reviewed by management, presented to the board, and we'll go through and look at them on a quarterly basis to monitor how the implementation, and that will not be a full audit. So I can't promise you that, hey, we're going to pick up everything that we would in the year end. We could certainly do a quarterly audit, but that would be financially unreal. It wouldn't make any sense.
We would focus on these identified items, so is that correct, that you come back?
We will anyway, some of the problematic items, but we're not going to go through the full
No, well, that'll
process of
again
getting
next
third
year.
party. Yeah, that'll be something that we'll.
Well, at least we'll have some outside review of the progress on these.
Yep. The journal entries is an offshoot of that. There were a number of journal entries, and a journal entry and an adjustment are synonymous. An adjustment could refer to account balances or to, well, we'll get into the financial statements here in a second. Actually, it's built into this. An adjustment could be, let me reread that. We combined these so that the internal controls over the journal entries were not being reviewed prior.
So sad. Oh my goodness.
So a lot of that was happening by the CFO. We will recommend, and that's another thing, that if you wanted to designate a member of the board to review a journal entry report, that's an outstanding thing to have some board involvement. I would not do that.
Well, I'm sure we'll all take turns. I mean, it can't just be one person again.
We each have our own
We
interest
have to
item.
rotate this for checks and balances. We all have to check and balance each other.
For sure, but I will give a word of warning there that it makes sense to assign that for a period of time.
Right.
Because you wouldn't want April, May, June, July, August.
Yeah,
Because a lot of the same things that are going to happen in April are going to happen in May. And
Exactly.
again, so you want some consistency, and you may want to designate a financial expert on an annual basis. However you do that is up to you, but I think that reviewing journal entries is an excellent board oversight.
But does that mean that the CFO was making the journal entries and Blaine wasn't reviewing them? Is that what this means?
I don't remember the specifics of who. I don't think that was required prior to that.
Oh, I'm sure. I'm sure it wasn't.
Yeah.
That's what I'm trying to figure out. So he was making the entries himself,
Correct.
and he had complete control over that.
No.
And
No, I don't think that's
He
correct.
wasn't even making the entries.
He wasn't making the entries?
Somebody's making the entries, but there's no review to make sure that whoever's making the entries is doing the entry right.
Was that ever a part of
Most
the
of the
bylaws?
time, Candy was making the entries. It was Tony's responsibility to review and manage the entries, and that failed.
An example of an entry that would need to be made for your information. When I mentioned the power purchase costs up front, right?
Yes.
Well, we get our bill for the month of March, and we got it last week, okay? That needed to be in March. And so somebody would go in and make a journal entry, putting that in the right accounts, so it hits in March. So when the bill actually comes in April, well, that entry was reversed out April 1st, bill comes in, gets paid, it's a zero in April, so it shows up in March, right? Well, if somebody was to make that entry prior to a month ago, before I came on, it just got made. Nobody reviewed it, nobody approved it, it just got made. I come from Pacificor where to do a journal entry, you had to have 6 layers of documentation behind each piece of paper.
There you go.
And so, that's the first thing I says, no more making these entries that are just an entry to be made. I want documentation behind every one of these, and so there's an actual cover page, documentation behind it. The entry was made after somebody not coming up with the information actually reviews it and make sure it's right.
Do you see the psychic pain this item is causing me? Right? This is just driving me crazy.
You gotta be an accountant and come in
No,
and deal with it.
to think that the CFO wouldn't do his job. He wasn't even doing that over Candy, right?
Was this mostly during the time when Tony was gone? Tony still do making it, was it also during the time Tony was in play?
It's a little both.
Let's just take the time, the post-Tony time. This finding would exist for that because you didn't have a CFO here. So this finding would happen
Okay,
regardless.
so this
But-
was just recently on that.
But there's two parts. So that's part one. To say, look, the condition of the company from, remember, was his termination date in? Okay, so for half of the year, there wasn't a CFO in place to even review those. So that was a condition that existed, that's been fixed now. That side of it's been fixed. The condition prior to that was that there was a lack of performance, that it's built into the system, it should have been done, it wasn't being done.
Right.
And
That's
so
what
so you've got two parts. First part is that there was a lack of performance. We're talking a year ago now. But the latter half of the year, there wasn't a person in place to actually do that. That part's been fixed. I think the latter part's been fixed as well.
So whose responsibility was it to see when the CFO was in place to check his accounting? What layer was on top of him to say, this is to check you out?
Right.
That would have been our annual auditor, and our annual audit failed to identify those deficiencies.
That's what I was gonna say.
2012,
Well, to me,
2013.
there's so many gaps here. There's so many holes here, people not doing their jobs, no accountability. This just shocks me. How much did we pay the auditors that didn't catch that? Okay.
Well,
And how much did we pay the
Not a
CFO,
lot.
now temporary company, that wasn't doing it since he left?
No,
This just shocks me, all these thousands of dollars.
look, we need to create a timeline to explain that, but now CFO didn't come on during it right like day one after Tony about it.
But even after they came on, it sounds like.
Well,
this
they were
problem is
engaged
still
for a
happening.
different scope of work too.
Okay, well, you see,
So-
this is what somebody, just hearing it for the first time, these are just questions
But I
that we
wouldn't-
ask.
But the question's fine, but the conclusions that you're drawing before we answer the question is the difficult.
Well, like I say, you know, I've studied this job.
I
I've
spent
studied
more
it
time.
initially, and see, when I see these things
Nobody-
happen, I just,
Nobody's arguing that there was a serious problem here with respect to the CFO, but then to draw the conclusion that it goes beyond there would require a lot more discussion.
yes, that's true. And that's what I have to find out.
But your conclusion was that it exists, and I would ask you to hold off making that conclusion.
So what was in place, if we had been following our system or place, it would have caught checks and balances there. Or did we put something new in place to keep checks and balances, it doesn't happen again? So what's,
Part is what we put new into place, so this won't happen.
For the one part, the other part is up to me to ensure that the process is followed appropriately.
Right, but you've
And
added
so-
a different layer that we didn't have before, which going forward should,
And that, I mean, then that's good, and that
Protect.
will eliminate this for the future, but Paul's here to report on during this window from January 1, 2013 to December 31 of 2013. This was a finding that they found, that this process was not in place or inadequately followed and monitored. Thus, they found these, it's not even a significant deficiency, it's a material weakness, which, go forward, they will be watching this like a hawk on these next 3 reviews, as well as the end of the 2014 audit, to ensure that this weakness is done away with.
right,
And Heidi's question about, and I had this discussion in the bar 2 days after he started, I think, is we talked about who is the checker and who checks the checker.
right.
Right, and
And,
who checks the checker?
well, at some
You.
point you have to stop.
There you go.
But-
That's your job.
That's our job.
But,
That's us.
and that's, we understood that, and when Ide Bailey was brought on, the whole idea was to have quarterly reviews till we got our arms around what's going on.
Right.
And I think you're gonna find that we get there very quickly, because we've identified the weaknesses and we're dealing with them aggressively, but it will take some time. And we haven't closed our eyes to this.
No.
That's why we hired these guys who have big guns and are not easily manipulated.
In the previous audit for 2012, assured the board and management that the appropriate controls were in place and the GAAP accounting procedures were being followed.
Is that the audit that was wrong, or is that this audit?
No, that's the 2012 audit that we think was deficient.
Okay, so you're saying it was last year's audit?
Well, in prior years, that's what.
Well, now wait a minute, those prior year audits.
It was a different auditor, they're doing the same
Yeah.
thing these guys are, but doing it last year.
Doing
We
it
just
in
have it-
2012.
We just have a better
Doing it for
solution and
2012.
finding better